Hi, Jay. Welcome to the show.
Hello, thank you.
Would you tell us a little bit about yourself and about your work?
I'm an accountant and bookkeeper specializing in holistic businesses, wellness, industry in general. And that includes like entertainment companies, artists, producers of products or services, massage therapists, chiropractors, like all that sort of thing. And or people who have more traditional business practices but are holistic or in the wellness kind of space as an individual.
Awesome. I would love to have you share a little bit about your passion for this work. Not everybody loves bookkeeping and accounting and taxes, and kind of how you ended up in this niche market.
Yeah. So many years ago, I went to business school in Virginia, University of Virginia, actually, and studied data analytics, finance, commerce, and completed that. And then I started working as a data analyst for credit card networks, including Visa and MasterCard.
Mhm.
And I did that for about 2 years. So I was creating like presentations involving consumer spending behavior for like the big corporate entities in the US and traveling to San Francisco and New York and very much in the banking sector, but working with like big data, statistical models, like huge Excel sheets. Then after about 2 years of that, the work was like really intense. I was working like 80 plus hours a week, Washington, DC, just like a horrible work-life balance. And I went on sabbatical, and that 1 year sabbatical turned into a 5 year travel experience around the world. And toward the tail end of that, I sold my hang drum, which is a musical instrument, like that I would play like meditative or sound healing, music with, to pay for my yoga teacher training in southern Spain. And then right after I got that, I came back to the US pretty much for the first time in like 4 or 5 years, at least to live in the US again. And then I got to Colorado and set up shop there, was a yoga teacher, basically up until the COVID lockdown. And then everything shifted for myself and my peer group. I went on unemployment myself because I was self-employed previously, and a lot of my friends were trying to do the same thing, but they didn't have a history of filing their tax returns. So I was like, oh, well, like, you can just do it on TurboTax. And they're like, cool, can you like show me how to do it on TurboTax? And I'm like, yeah, sure. And a lot of those friends happenstance were like, yoga teachers, massage therapists, like wellness, holistic focused individuals and artists. And then, when I finished the work with all of them, they obviously had referrals for me. And then later on, more and more COVID funding happened, like the payroll protection plan loans came out. And then I was helping a lot of people get approved for those and doing the paperwork, and, different government subsidies and other grants were coming about, like the EIDL program.
Yeah.
It just like brought all my like business school history and like background to the forefront. And then that was obviously like the accounting side. And then the bookkeeping side became very natural because people would be like, well, I need to do my taxes, but I haven't done my bookkeeping. I'm like, oh, well, I can do that too, because I have a data analytics background. That's kind of where things are at present day.
I love it. How are you finding the alignment? Like, how is energy work and yoga, and how is that kind of similar to bookkeeping?
Yeah. So energy work particularly is an interesting thing to compare with bookkeeping and tax prep. Because, out in the traditional world, those things might be like so incredibly far apart from one another.
Right.
But really, like, especially when you're working with holistic and wellness industry folks, like people are generally more open to energetic experiences and emotional, like things that are happening throughout the process. So I think what I find is like a lot of times people come and they're like in such a state of like they have so many things in arrears, they haven't done their taxes in 3 years, and it's like very much an emotional burden on them and a spiritual burden as well. And then, there's obviously a lot of space holding that has to go into those kind of client relationships where, we're trying to develop like a healthier relationship with the data, like not even necessarily a healthier relationship with money, but just a healthier relationship with the money that has already come out and the money that has come in. Because, I find that when people start to see the numbers, then they start to settle down because things are more like apparent and clear, versus when it's like mysterious and they have no idea what's happening and they don't know how much they're going to owe and they don't know how many penalties they're going to get hit with. Then that, there's a journey for them. Right. And that journey is like the same sort of journey that if I have someone down on an energy working table and I'm working on them, like, you start soft and then you can work into like more of the nuances, and then you can really start to like get some work done. Yeah. And then, the middle of a 2-hour session, like those 30 minutes of like a peak experience, like, when you're talking about like leading a yoga class, right? You don't just start with the handstands, like you slowly get people there. But, halfway through a bookkeeping session, that's where we're like flying through Excel and, I'm converting like, I'm doing currency conversions and I'm like pulling in contractors' names and doing all sorts of formulas and stuff. And yeah, a lot of people really enjoy the experience because I'm always sharing my screen and they're able to see everything that's happening. It's not this like, you send your stuff to some accountant who lives in Austin, Texas, and he sends you an email back 2 weeks later and says that he filed your return and, sends you an email about it. Like it's a totally different experience, I think.
I love it. It's perfect. And I have similar, I have a big background managing networks in the insurance industry and consulting on healthcare benefits, and kind of tying that into my new life here on Maui. That's a little bit more esoteric and spiritual. So I love that there's people like you and I in this kind of niche market world of healers, and that we see that the work that we're doing is actually really helping humanity as well, right? Just as much as an energy worker is.
Yeah.
It's awesome. Okay, so share a little bit with us about who's your ideal client? Like what size and type of business are you primarily working with? And like who would you not be able to work with?
Yeah. So predominantly, the current like revenue that I see, I'm totally like very open to willing to work. I'm open to working with people that have, $5,000 to $10,000 coming in a year in revenue, because, they're going to grow that. And a lot of my clients started out that way. So there's no one really like too small, okay. I would say. And then in terms of the upper, but a lot of my clients are, in the like 40K to 120K a year, I would say, especially for service related individuals. And then I do have some product related clients. Obviously when you're selling product, you have much higher scalability potential. And, I'll see revenues up to $1 million a year. And some of my clients are starting to push that figure now as well. But I don't generally work with like huge corporations. Over 30 employees is probably I might end up working with like a client that grows to that threshold. But if somebody's already operating with like 100 or 200 employees, that's probably too large without us having some sort of pre-existing relationship. Like I've worked on their personal returns for a few years. And then in terms of like the business setup, I work with the LLCs, whether it's a single member or multi-member, partnerships, S corps, C corps. So whether it's a corporation or a small business entity, I'm starting to work a little bit with nonprofits, but it's definitely not a layer of current expertise, but that could change by the end of the year. Because I do have clients who are actively setting up nonprofits right now, and they obviously want me to continue working with them in a tax capacity in that. So it'll be a little bit of a learning process, but that's kind of, how I've gotten up till this moment, is a lot of like, figuring out as I go. And obviously I do a lot of research anytime I'm involving myself in a project that is a little bit of a stretch, but I usually openly communicate that with people. That way they're not coming in with an expectation like I've worked with nonprofits for 10 years, because that's not the case.
Right. I love the honesty about that. And like that the focus is really on where a lot of our healers are at right now, which is kind of small entrepreneurial sole proprietors
Right.
and growing. And I love that a lot of your clients, you've seen them grow. So that's, I have no doubt if we have this conversation in a few years, we're going to have a whole different clientele base based on everyone's growth.
Right.
All right, so let's get down to some business. We've narrowed down a list of hot topics to 11 questions that we think every small business has or should ask. And today we want to ask the expert, and that's you. So are you ready?
I'm ready. Fire away.
Do I need to set up an LLC or can I stay a sole proprietorship forever?
Yeah. So there's definitely a comfort in having a sole proprietorship, right? Like it's a lot more simple to set up. It's easier to keep it going. Generally, you don't even have to file annual reports unless you have a trade name that you're concerned about, people using or adopting your trade name. Then it's definitely one of the easiest entities. And technically, you can be an unregistered sole proprietorship. And from the IRS's perspective, that's completely okay. Like you can run a business as an unregistered sole proprietorship. Basically, anyone with a social security number in the US is able to do that. You can send people 1099s as contractors. You can receive 1099s to your social. You can do pretty much everything. The main reason that you might want to go down to the LLC route is particularly for business liability. So depending on what kind of work you're operating in, whether you're a massage therapist, a chiropractor, or even if you're doing energy work, or even if you're doing some other kind of service where you're working directly with people in a one-on-one capacity or even in groups, then obviously there's some liability. Like you could injure somebody by giving them a yoga adjustment, or anything, any sort of liability concerns. Basically, if you have an LLC, then most of that liability, unless you are completely negligent. Obviously, I'm not a lawyer, so I'm not going to dive too deep into the law element side of it. But as long as you're not completely negligent, then most of those liability cases would route through your LLC. And then, if there was some kind of liability issue, then the LLC would be found at fault and would owe, whatever amount of money it was in a courtroom. And then, then you could just bankrupt your LLC effectively. So they're not going to take your assets. They're not going to take your home. They're not going to take your car unless that car is in the LLC's name. And then they certainly could take that. So really the LLC, like predominantly it's a buffer between yourself and any liability that arises from doing the work that you do as a business owner. And you won't get that buffer as a sole proprietor, like you're in it. And additionally, another thing you might want to look at is if you are ever even considering the idea of selling your business one day. And I know a lot of healers, like that's kind of a weird idea because it's like, well, no, these are like my clients for life. And like, other industries, it's more common, I think, that people might sell a business, but within the healing space, there's less of that mentality. But, just to throw that out there, especially if you're selling products, if you ever wanted to sell the business, it would be much easier to do it through an LLC. You could just transfer the LLC to another member. If you want to open a business bank account, they will often require that you have an LLC already set up in order to do that. So that's another reason that you might want to do that, to basically separate your business and personal finances, because it's not the most important thing in the world year one, but when you get to year 2, 3, 4, if you're not separating business and personal, that is definitely a layer. That's definitely something that could help you. Because that could even feed into a liability case. If you don't separate business expenses from personal expenses, then, if you brought your bank statements to a courtroom and you're like, oh, well, I operate an LLC, but they're like, yeah, but you're using your personal Wells Fargo account. Then potentially somebody on the other side, on the prosecution side, could say like, oh, well, it's not a real LLC. You're just using your personal accounts to do business. So that kind of wraps back into the liability. But yeah, even opening something as simple as a business bank account will often require you have an EIN set up as an LLC. Sometimes you can get away with doing it through an EIN as sole proprietorship as well. Just know that depending on what state you're in, there are annual requirements for holding an LLC open. So some states like Florida charge as high as $150 a year to maintain your LLC. state like Colorado will charge $50. It's one of the lowest. Hawaii is, I think, 50, or it might even be down to $15 in Hawaii. I think Colorado is $15. It's $50 to set it up initially. But I mentioned Florida because Florida is a no income tax state. So if you do have an LLC running out of Florida, then you could potentially pay no income tax, but technically all of the work that you do has to take place in Florida as well. Yeah.
Interesting. Yeah, I always advise people not to worry about the LLC part, because I think sometimes sole proprietors get bogged down trying to set up an LLC right away.
Definitely.
And I always wait till if you own a home, or if you have a lot of assets, then, and you have a pretty good business going, then you can switch it over to an LLC, but you can always start off with a sole proprietor. Yeah,
exactly. And I've heard of a lot of people kind of getting sharked into paying $200 to $500 to set up an LLC with a company that doesn't always do the paperwork right, doesn't even send you the paperwork. I've actually had that come up with several clients in the last few months, where I was like, oh, do you have your employer identification number, which is a very important document? They're like, well, I don't know. I paid this organization online $300 to set it up and they didn't send it to me. Well, okay, then we have to do some research. Did this organization actually set up your LLC, or did they only do half of it? Because sometimes I've even found that those entities will set up the articles of organization, but they will never actually file the EIN with the IRS, which is, a very important part of having that type of entity.
Yeah. And you can get an EIN as a sole proprietor just by filing your business name.
Yes.
A little different in Hawaii, but
that's true.
Yeah.
Yeah. So you could get a business account through that method.
Yeah.
It would just be hooked up to your social, and again, harder to transfer that to another person, or but you could certainly do it, and it would be cheaper to run on a year-to-year basis. And like you said, year one, it's not something you want to put at the forefront of your mind.
It's one of those blocks, I think, that prevents people from getting started. But I love, So here, the other block I find often leads into our next question. Do I need a business plan? And what about financial projections?
Yeah. So I obviously took a lot of marketing classes alongside my my finance and commerce degree, and within the realm of marketing and finance related to that, whenever we're talking about something in the future, it's kind of a made up phenomenon, right? That's the reality of it. And I want to use reality lightly, because obviously reality can be fluid too. But when you're looking at anything in the future, especially a year down the road, 2 years down the road, or more, a lot of people who have a business background are going to find some layer of silliness in putting out numbers and wishing them or hoping for them to be true, or even bringing them up in a boardroom, or trying to express them to a potential investor. There's so many assumptions that go into creating a financial projection that nobody should be willing to take that information as true. The only individuals that would take it as true are people who might not understand how those assumptions do affect the quality of that model. And I'm talking very much from a data analytics, quantitative background, that within a financial projection, you might have 15 assumptions layered in to figure out what your income is going to be a year from now. If one of those assumptions is wrong, or very wrong, then the entire model is pretty much useless. So, I have clients that come to me asking me to create a financial projection, usually for a very specific requirement, like they're applying for a grant, they're applying for a loan, they're applying for space at a center where they can host events and retreats. And a lot of times, the people who are asking for that are just trying to do their due diligence of does this person kind of have an idea of how the business world works, or are they just hoping that money will fall out of the sky? Which, sometimes it does, especially if you find yourself in a very niche market and you're offering like a very specific service, like, you know, you're offering like sound healing services to amputees in Guatemala who are traveling from out of country. Like that's a very like niche market. And as long as people can find you on the internet, like you might very well be able to host your $5,000 a person retreat and be very successful in that. But anyways, like financial projections, they have a lot of assumptions underlying them. Business plans, I think business plans do have an inherent value. Sometimes it depends on like the way the brain works of the person who's setting up this business, right? Some people, they are organized in other aspects of their life, but they're not organized in the business world. And a business plan can help them feel comfortable in the adventure they're about to go out into. I'd imagine, particularly for someone who might be moving from like a full-time position at a company, or, you know, full-time stay-at-home mom or something like that, or stay-at-home dad, moving into, okay, well, now I actually want to launch my business, but I'm not quite ready to do that until I know what I'm getting myself into. So like a business plan can be valuable in doing that. And there's a lot of templates online that can help people understand like how they can put together a business plan. And I've done it for some clients, like I said, for very specific needs. And it's something that I was tasked with doing many times during business school.
So it sounds like it could be helpful in specific situations, or it could be helpful even if you're doing it yourself, but not, it shouldn't be a roadblock.
Right.
Yeah, I like that answer. All right, here's one that I really, I'm always late on my quarterly taxes. Do I need to pay quarterly tax payments? Tell me.
Yeah. Well, if you don't, the worst case scenario, if you were required to submit them and you just didn't know that, or, you know, whatever had transpired the year previously to put you in a position where the IRS was waiting for them. If you don't, you're looking at a 0.5% penalty per month that quarterly payment is late. And there is a cap on that. The cap might be either 2.5% or 5% of the total tax value of that quarterly payment. So people who are doing quarterly payments of like $250 a quarter, that's really like, I mean, the penalty of that is going to be so small that it's probably worth your time not to log into your state portal or the IRS portal to try to even do that payment. And obviously you can send in payment vouchers too. But yeah, I mean, if you're working on really small dollar figures, then even if the IRS did want to assess a penalty, it would be such a small amount. Now, the minute that your business does start to show a very, very strong profit in a particular tax year, you should be prepared to file quarterly tax payments the following year. Because basically once the IRS knows that, okay, you know what you're doing a bit, like you've been around the rodeo, you're generating, you know, 5K a month profit, that's a big deal. You know, that's like potentially $60,000, $80,000 a year of profit. And at that point, the IRS is going to, or really any tax software you're using or accountant, will generally prepare your following year quarterly tax payment vouchers, and those will generally precede your tax return in the file that you receive. Not always, but even TurboTax does this. Other tax softwares do this, where if you went in and you said in 2021 you earned $70,000 of profit, not revenue, but actual profit, then it's going to automatically calculate your payment vouchers for the following year. And then at that point, it's in the IRS's database that like you're running a profitable business, that there's an expectation of that. So yes, if you don't make those payments, then you're probably going to be hit with those 0.5% penalties per month that's late. And you know that for Q1, that could be up to 11 months late. For Q2, that could be 9 months late. For Q3, that could be 6 months late. So yeah, I mean, it really depends on the dollar value, but just understand that quarterly tax payments are going to become more of a thing, particularly as you start to show more profitability. Which brings me into just a quick point. I know we mentioned sole proprietorships and LLCs, but right around the $60,000 profit figure is where I start to recommend that my clients consider the idea of setting up an S corporation, which is a specific tax entity that will help reduce double taxation. Because when you are a self-employed individual, you have to pay 14.3% tax on your self-employed earnings, and that includes Medicare and Social Security built into that. But then anything that you earn above the standard deduction of $12,500 if you're single, $18,000 if you're head of household, any income, including self-employment earnings above that threshold, is going to be taxed at a marginal tax bracket. So whenever you hear people talk about double taxation within the self-employed world, this is what they're talking about. So if you're at that threshold where you're sending in $2,500 plus a quarter for quarterly tax payments, you're probably at the point that you might want to consider an S corporation. That could save you around $3,000 a year of taxes if you're showing around $80,000 to $110,000 in profit. Obviously, if you have a lot of expenses that reduce your revenue, you might not be showing that high of a profit, and then you're not going to get as big of a benefit by moving down the S corp route.
Okay, that's good. Those are good thresholds to be aware of, to know kind of at what point you need to kind of think of upping your game a little bit in the business world.
Right. Yeah.
That's awesome. All right, next question number 4. Do I need to hire a bookkeeper?
Well, you could certainly try to do it yourself. And Jen and I had a brief talk prior to this. I know that, we talked about QuickBooks and the joy of using that particular software. And, just that's really tied in here, because I think if you don't hire a bookkeeper, what you're looking at is using QuickBooks. And that's really the industry standard. And, if you go out to the curb and you pull out your phone and you want to order a taxi, most people are like, oh, I either use Uber or I use Lyft. And then they will get a ride to an airport. And generally that's going to be a really positive experience. Like, those are the industry standards of taxi / rideshare driving. I would not anywhere near put Intuit and QuickBooks to that threshold of being as good at what they do as Uber and Lyft are at taxiing people around.
No.
Even though it's the industry standard.
Yeah.
And, it's unfortunate because it's, a software that's passed around so often. 95% of my clients used it, prior to working with me. But inherently, that software just has so many issues, I find. First off is that as you're going through and trying to do your bookkeeping, QuickBooks requires so much clicking. Like, you have to, click into the transaction, then you have to click attach a receipt, and then you upload your receipt. And then if you were looking at the expenses, but you're like, oh, but now I need to look at my sales and make sure that, my sales to a particular client went into my QuickBooks right. And then you have to click on the sales section. And then, if you don't find it there, you're like, wait, but didn't I send them an invoice? And then you go over and you click the invoices section and you're like, yeah, I did send them an invoice. Oh, they didn't pay it yet. And then that entire research process just took you quite a bit of time to figure out one line item. Additionally, the sorting features on QuickBooks, and I'm talking about other software out there too, whether it's FreshBooks or Xero, Wave, which is the platform that I personally use, and I'll mention in a moment. But when you're in QuickBooks, there's so much clicking, and the filtering capability is not very good. You can't just filter it by every type of thing that you want to filter it by. You might only have 4 options. You can't just add a new column to your QuickBooks to say, which business this is associated with. Like, let's say you start a second business. Well, then you're looking at creating a second QuickBooks account, and you're going to have to pay the monthly rate for that too. And then the other issue I have with QuickBooks is they're constantly changing their software, potentially improving it, they might say, but really what that does is it makes it like a learning curve. Every time they change the software, your bookkeeper or yourself, you have to figure out how to use the new iteration of that. So what I do, given, I have my data analytics background, I'm really comfortable with Excel. Whether a client has to use QuickBooks or I can use a software that's completely free like Wave, which is my preference, Either way, I use both of those programs to do the same thing. And that is basically to pull in your bank statement history in a secure format where you don't have to give your bookkeeper or myself, or you don't have to give anyone your login information for your bank account. Nobody has the ability to move money on your behalf. We can only look at what's happening in your account. So I enable that within QuickBooks or Wave. And then it's hooked up, so it starts to generate and populate with those transactions. And then from there, I export that data immediately. I don't touch it in QuickBooks. I don't touch it in Wave. I simply use that as a method to create the data. And then I take that data and I go run with it. And I put it in Google Sheets and spreadsheets. And then I can do all the crazy filtering and VLOOKUPs and pivot tables that my heart desires to make that data set into something really valuable for the business owner, which might look like profit loss statements, either monthly, quarterly, at the end of the year, so that myself or another tax preparer can complete that tax return. And so in terms of whether you need to hire a bookkeeper, I mean, it's probably a great idea. Particularly as your business grows. A lot of my clientele will start coming to me for taxes, like a simple, Schedule C tax return, and then our relationship will grow when they start needing bookkeeping services. And a lot of people will go try to do it themselves, and then they'll come back to me and say like, oh my gosh, I just spent 7 hours trying to figure out, QuickBooks for last year. And I'm like, oh, well, we can do it in an hour and a half session. Because it usually for me with the data analytics background, it usually takes an hour and a half to 2.5 hours. As long as you don't have a huge, product-based business, that's generally always the case.
Yes, I have struggled for many hours with QuickBooks myself. So I was really happy to hear you say that I wasn't the only one, and give me permission not to use QuickBooks.
Yeah.
So that's awesome. I think I'd love to explore a little bit more about what hiring a bookkeeper kind of looks like. And maybe that's a different session, but I think that's something that it's almost like the first time you hire out, like a housekeeper for your house, or you hire out your laundry or something. It's, as a business owner, there's some things that we just don't think that we could outsource.
Right.
That if we did, our life would be so much easier and we'd be so much more profitable.
Right.
Yeah.
Yeah. And I think it's like, some business owners clench to particular aspects of running the business because it feels comfortable. And sometimes that does prevent you from taking that next step of growth, because, if you're in charge of your books, then, every extra dollar you sell is a dollar you have to track. Right. So it reduces your scalability. But I try to work with my clients in that if the way I'm presenting the data doesn't give them the managerial opportunities that I would like them to have, then I try to change the data set so that it can help them out. For example, my profit loss statements are generally set up so that they can go immediately onto a Schedule C. That includes categories such as dues and subscription, app, software, web services, uniforms, yada, yada, like all of these different categories. But somebody might say, well, how did I spend $2,000 last year on app, software, and web services? Historically, I wasn't presenting that underlying data. And, somebody could look through the raw data file, but that's a very large file. So what I've started doing is creating a new tab for my profit loss statements where it shows within each of the business categories, it'll break down the merchants associated with that. So you can go to that second page and be like, okay, let me look at the dues or the app software. Oh, I spent $500 at GoDaddy and $600 at Facebook advertisements or something like that. So it can become more clear for people. So I think, just
I love
like from my perspective, I do try to work with people in terms of like letting them feel comfortable with their data and not feel like they're like completely hands off, because I don't want people to feel really hands off when they're working with me. I want them to still feel like they have that ability to be like a team player in that experience. Just it's not, the whole burden is not resting on them to make decisions in relation to bookkeeping and accounting.
And I think that's really good, because I think sometimes people who aren't really in the business world kind of just want to be hands off. But at the same time, when they are totally hands off, it could also kind of prevent them from knowing where they need to grow their business or how they're spending their money. And it's kind of good to keep your foot in the door a little bit. I find.
Yeah.
I like that approach. All right. So what if I'm ready to hire help or employees? What do I need to do?
Yeah. So when we're talking about hiring help, probably that looks like a 1099 contractor. So if you're paying somebody more than $600 during the year, and that even includes like a life coach, it does not include like a lawyer or a tax professional, or anyone who's set up as a corporation, but basically anyone else floating around in the world who's out there doing work for people, even if it's janitorial services or childcare support, as any parents who take that 50% deduction on childcare would know. That person does need to be ready to offer their tax information, which is usually their social security number.
Mm-hmm.
Now, if you tell your landscaper who previously had no idea that you were going to, put him on your tax return as a deduction, and you say, hey, I need your W-9 so that I can give you a bill for last year, like that could be a pretty scary event for somebody who was not expecting that. So I'd always recommend that you have a open line of communication with anyone who you might consider an employee, because you might consider them an employee, but they might not have that awareness yet. But for contractors, if you're paying them more than $600, then you technically need to issue them a 1099 NEC at the end of the year. That's what used to be a 1099-MISC. It's changed to a 1099 non-employee contractor. And if you're paying W-2 wages, my recommendation is you use a full service payroll provider like Gusto. And basically that's going to cost you $40 a month plus $60 or $6 per employee. So if you have 2 employees, that's $52 a month you're going to have to pay for the perpetual future if you're going to have a W-2 employee. Obviously, like the benefit of that would be you can offer benefits, you can offer 401k matching through Gusto, healthcare, that sort of thing. But yeah, I mean, if you're looking at hiring for just standard, like regular help, it's going to be a contractor. Now, the real legal requirement here, because technically it's not your choice whether this person is a W-2 or a 1099, and a lot of business owners don't understand that. It's technically a legal, situation in terms of if you have to provide consistent managerial advising and kind of like watching over somebody to do their job in an effective manner, then at that point, that is an employee. If you have to be there all day throughout the day, telling them what to do, how to do it, that's an employee, AKA a W-2 employee. Even if you want to pay them 1099 because there's a tax benefit for you, you legally, technically cannot do that. If it's somebody who can completely do their own work without your, maybe you give them a little understanding of like, oh, this is how I want it done. That's fine. But on a general basis, if they're able to just go off and do it, like, if you're hiring a yoga instructor to come teach a class, or, you're hiring somebody to come teach a workshop, or you're hiring somebody to come clean your home. Like, even if you tell them, well, I want the mirrors cleaned this way, it doesn't necessarily mean that you're like, constantly with them throughout the day, telling them how to do their job. It just means that you have a preference. So preferences are going to be different than consistent input. And if they don't need consistent input, then that's completely a 1099 employee. And that's true whether you pay them with check, cash, Venmo, PayPal, any of these services. Once you pay them more than $600, even if you're marking it as friends and family, technically that is a 1099 contractor. And if you want to write it off as a contract labor expense on your tax return, then to be safe from an audit perspective, you should also send them a 1099. And the IRS is going to be looking out for that. If you have a contract labor expense of $15,000 in a year, then you better be sending out some 1099s.
Makes sense. Yeah. So, okay, that's all really good information. And I haven't heard of Gusto, so that's a good tip when someone's ready to actually do payroll. in a kind of a legitimate way.
Yeah.
That sounds like a good third party app to reach out to or look into.
Yeah. And I will say Hawaii is a little bit complicated. I just did a Hawaii setup on Gusto with a client the other day, and there's a lot that goes
Yeah.
into it.
And there's get taxes as well, that your independent contractors will have to pay the Hawaii tax. So I know there's
Right.
kind of you have to kind of weigh the benefits for yourself to not pay payroll taxes if they're considered a independent contractor versus how much are they going to have to pay in taxes as an independent contractor, then also having to pay sales tax.
Right.
So you want to do right by your employees.
Definitely.
Awesome. Good. Thank you for that answer. Okay, let's talk about write-offs a little bit. So, if you're a massage therapist, can you write off a massage or an adjustment? Tell us.
Yeah. Well, this is a live recorded broadcast, so I wouldn't want to necessarily say something that puts me under a microscope of IRS, discretionary practices. So that's a partial disclosure. And the other disclosure is if you can really validate that the expense is ordinary and completely necessary and not extravagant to do your work, then that is what qualifies as a business write-off. So, ordinary and necessary. So if you work from home and McDonald's is right across the street and you go to McDonald's, I mean, this is a holistic call. So I rarely see McDonald's show up on my client's book. So Mod Market is a very Colorado like fast food place. If you live across the street from a healthy fast food and you're like, oh, I could eat at home or I could go over and just get a bite there, that's not ordinary and necessary, right? It's not necessarily extravagant, but it's not ordinary and necessary. Now, if you're working on the other side of town and you're a delivery driver, and you physically cannot get home to, go into your fridge, and you're halfway through a delivery route and you have not eaten that day, your boss doesn't even give you a lunch break, and you're like, I got to stop somewhere to get food. Like that's ordinary and necessary in order for you to perform that task. Like you're doing business right up until the moment that you eat that food, and you're doing business right up the moment after you eat that food. In terms of meals, additionally, if you're meeting with a client, like that's ordinary and necessary as long as it's not extravagant. So, if you go to the most extravagant resort, Ritz-Carlton restaurant on Maui and spend $600 to wine and dine a client, if you're selling a multi-million-dollar product, that might not be extravagant. But if you're selling coaching packages that range from $3,000 to $12,000 for a 6-month program, like that might actually be a little extravagant. And then, meals are kind of the one I mentioned because there's a lot of gray area with meals. And a lot of people probably write off more meals than they should. And technically, you can only write off about half of the meals that you take anyway. So that would be a line item adjustment at the end of the year, with the exception of last year due to a 1-year change that they made. But you mentioned massages. So if you're a massage therapist and you're engaging in what is truly continuing education to do your work, then absolutely, like that is a continuing education expense. If you're a musical artist and you're going to a concert, you can very feasibly tell them that you are engaging in continuing education because, you're figuring out, like, you might learn a new chord progression. You might like figure out a new way that you want to play music, or you might see a particular way that they're doing the lighting show, and that might inspire something for you. If you're traveling to another Hawaiian island to go on, a trip to potentially find new clientele, that could very well be a work trip. Even if you're traveling across the country, and maybe the predominant reason was, or maybe the initial reason was you were going to visit family, but maybe as you were planning that trip, you realized, oh wow, this could be a great networking experience, and then there's a conference taking place in the city nearby, so I'd like to go to that. Then that could potentially be wrapped up into a work trip, and it could meet those criteria being ordinary, necessary, and not extravagant. Now, if you are, I'm trying to think of like not a very physical job. I guess as an accountant, whether a massage would be ordinary and necessary. Well, in tax season, it might very well be for me. But, in August, where I live in Maui, I can go to the beach every day, and life is pretty relaxed here. I don't think I'd be writing off, a $200 massage session during a week where I might only be working 15 hours. But if I'm working 60 hours a week in front of a computer, this is kind of where like there's a little bit of gray area, at least not from the IRS's perspective, because they operate very much in black and white. But for me as an individual, just assessing whether that's ordinary and necessary. But then also, a lot of those expenses might be considered personal health. And then you could write those off if you were doing itemized deductions, which usually people don't itemize their deductions unless they have a mortgage that is where they have to pay interest on a property or something like that. But then in that case, a chiropractor is a health expense. A naturopathic doctor visit is a health expense. Those are all health expenses that could very easily be written off from an itemized deduction perspective.
Yeah, I think health expenses have to reach over a certain threshold. I very rarely find a year where I can write off my health expenses, but yeah, that's awesome. Okay, well, so that's good. Ordinary and reasonable and not extravagant. I like those guidelines.
Yeah.
Cool. All right, here's the big question. How can I prevent an audit?
Yeah.
I have my own tricks. I'm an astrologer, but you tell us.
Yeah, well, it's definitely a science and an art, as with everything in the business world. And I mean, to get down to like the statistics side of it, there's a 1.4% chance, supposedly, of somebody who files a Schedule C of being audited. Supposedly, there's a 0.7% chance of somebody with an S corporation that I mentioned earlier being audited. Now, those figures are thrown out there and, very well could not be grounded in reality. They could even be numbers that are kind of passed around trying to make people think that there's a higher likelihood than there actually is, because the IRS is under a lot of pressure. And I do know that they did not receive a lot of the funding that they were trying to get under the infrastructure package. Potentially, they were looking at expanding the IRS very significantly under the infrastructure package that was going, through the process about a year ago, sometime in 2021, that is. And yeah, that package itself didn't get passed, and they did take out some parts of that to pass individual laws, but the IRS funding was not. So I wouldn't say the IRS is struggling as much as USPS, but they're not doing as well as they would be if they had received that funding. That being said, people still do get audited, and you could potentially expect to get audited once in the course of your lifetime, especially as a business owner. If you're a W-2 employee, there's almost a non-existent risk unless you start to have rental properties and some other income flows, or you're operating in the world of cryptocurrency or something like that and making a lot of capital gains. Then from an individual base, I would say be prepared to go through one audit in your lifetime. Okay. There's some thought that like once you get audited once, you're more likely to get audited again. And obviously it's like statistical, and it comes down to a little bit of luck. And it comes down as well to not making just really bad decisions when you're filing your tax return. Even, for getting a 0 on your W-2 when you type it in could result in a giant tax refund. I actually had this happen for a client. On a tax return that they had done a couple years before they started working with me, and then they were audited on that return. for them, they ended up with like, a $4,000 refund when really they shouldn't have gotten any refund at all. And then the IRS wants that money back plus penalties and fees and, et cetera. And then you get audited. So even something as simple as forgetting a zero or even transposing a couple of digits, if you do that in the beginning of a number versus the end, then it's going to have a very big impact. So, people that experience like numbers dyslexia, maybe there's a particular word for that, but that could put you in a higher risk threshold, So errors or mistakes on your return are definitely potential flags. And there's other flags, like if you run a business that only shows $3,000 of revenue, but you're claiming $10,000 of business travel, that is a huge audit red flag. And TurboTax at least will yell at you if you try to put that through the software. Some other programs may or may not yell at you. And an accountant hopefully will yell at you if you try to put those numbers through.
I can't imagine you yelling, Dave, but I do always recommend to people that they have somebody else help them with their taxes and not do it themselves. I think it's especially healers and people who are working in kind of the spiritual realm, it's so easy to transpose a number. And so I think it's really good to have people on your team that are looking at all the details.
Yeah.
To help you. I personally file my taxes or try to always file my taxes when the moon is void of course. And so I know I asked you this question, if you could accommodate that kind of timing, because I know some tax accountants now they file electronically and it's a little bit harder to make sure my taxes are getting filed when the moon is void of course, but that is an old astrology trick to avoid having an audit. It's almost like sending in your taxes like when there's no energy behind it and nobody's really going to look at it.
Yeah.
So you assured me that you could probably accommodate that kind of a time.
Yeah, I do all of my, at least for this year and historical years, I do all of my sessions like one-on-one via Zoom, sometimes in person if people are based in Maui.
Yeah.
But I have a Calendly link, and then you basically just pick a time slot, and then that's ideally we file your taxes at the end of that time slot. Sometimes, we'll have to file an extension, and then you have all the way until October to file your taxes. So hopefully you will find a good void of course time by then that works with your schedule. But yeah, during tax season, ideally, people who file their taxes in February, it's just a way calmer process for everyone. And anyone out there who's listening, whether you're using me as an accountant or somebody else, I think it's just a great thing to file in February if you can swing it. If you're waiting on a Schedule K-1 from a partnership or something like that, you can't. You have to wait until March 15th. But if you've received all your forms and you can file in February, then that's a great place to be for everyone involved in that process.
Good to know. I'm always habitually late. I strive one day to be a February filer. Let's see if I can get there. That'll be my.
Yeah, and there's some alliteration in that too. So
I know, right? Okay, next question. What happens if I move to a new state? We had so many people moving to different states in 2021. It was a 5-year numerologically, and so many of my friends moved. So how does that affect filing taxes and bookkeeping?
Yeah, so from a W-2 worker perspective, it should be very easy. You just let your employer know, and then a full service provider like Gusto or whatever they're using should be able to figure out. Basically, they'll put a cutoff, and you'll probably get 2 W-2s at the end of the year. And that's confusing for a lot of people because they're like, wait, I have 2 W-2s with the same federal amounts, but different state amounts. That's because you paid state taxes to 2 different states. So that's W-2 side. You don't have to put in the numbers for the federal income. You don't want to put in the numbers twice for the federal income. But for self-employed work, basically, more than likely, we would end up having a cutoff date where you left one state and you entered a new state. Let's say you left Florida in the end of March and then you moved to Colorado in April. Florida does not have state income tax, so you don't even have to file a Florida return. So we would only file a Colorado return from April 1st until the end of the year. Any business revenue that you earned in Florida would go on the Florida tax return, which doesn't exist. And any business revenue you earn in Colorado, you'll need to pay Colorado state income tax. Now, obviously, if you're in a position like that, you might be like, oh, well, maybe, let's just try to move like more of my income into the state that has a lower tax bracket. And I have a lot of clients that we can feasibly like have that based on their books. And a lot of times that's a good idea, especially if you're moving to a state like California that has up to an 11% state income tax. So yeah, I mean, depending on where you're moving and from and where you're moving to, most of the time we'll end up doing 2 states on a tax return. I've had clients that had 3 or 4 states on their tax return because they had W-2 jobs. And if you have a W-2 job in a particular state, you can't really get away from telling the IRS that you didn't live there. You need to put it on your return. But if you're kind of transitory and you're running your own business and you've always lived out of Florida, but you're kind of driving around the whole country and operating your business remotely, then you could very feasibly maybe say that most of that business activity was generated in Florida, rather than trying to scatter it across all the states that you might have been operating in the short term.
Right. Okay, that's good to know. So just you might have to file multiple state returns.
Yeah, it should be as easy as that. And then the main like little challenging thing from a number perspective is just making sure that you allocate different dollar amounts to the correct state. Like if you earned unemployment in Georgia, you should make sure that goes all on your Georgia return. If you moved out of the state before your unemployment ended, then that's a complication. And we'd have to find like a good date to set as the threshold where you left. Because anytime you're receiving income and that income is specifically tied to a particular state, you should make sure 100% of that is within that state's tax return, not doing like a 50-50 split. If you move July 1st, you might do a 50-50 split on your self-employment profit, but you might not do a 50-50 split on your unemployment, on other kind of benefits that you might have received, or anything that was particularly attached to one of those states.
Okay, so now you're creating all these questions in my head because we did something like that. So I'm gonna have to talk to my tax person or maybe you in more detail about that.
There you go.
Yeah, complications. I love figuring out the complications. Okay, next question. Can a self-employed person get a mortgage? And this, dear to my heart as a real estate investor. So what's your experience with that?
Yeah, so it's going to depend on your mortgage broker, 100%. And the time period, like the Fed just increased rates a few days ago by 0.5%. That can increase mortgage rates from what was previously a 3% rate, with some of the good lenders out there, to what we might be looking at a consistent rate of 5% and above now. Whether that takes a few months to be put in place. Basically, one of the opportunities that exists for people with very non-traditional income streams, including self-employment, as well as potentially like IRA distributions from an inherited IRA, or inheritance in general, or like a lot of money from gifts from family, any of those sorts of things, or other non-traditional income streams could put you in a position where a bank statement loan could be a very good opportunity. And different mortgage brokers will have that. A lot of the primary like commercial banks out there will not offer that. So you might need to shop around for a smaller lender or mortgage broker. And that's a bank statement loan, which basically they're going to look at your bank statements for the past 1 to 2 years generally and see how many deposits are coming into your account. And they might go as far as see like who are the deposits coming from, what kind of activity is this. I've heard that they look at business revenue a little bit differently from personal revenue. And then obviously you can pay yourself money through the business and that can be treated as personal income. But if you're operating a space where you're getting $30,000 in deposits in your account every month, but you have no W-2 income and your business hasn't shown a profit for years, then that might be a good case of where a bank statement loan could really work for you. Another opportunity, if you just feel like you have to go through a traditional mortgage broker, and whoever it is asking you for W-2 statements. Now, you wouldn't necessarily be able to do this retroactively very well, but if you're planning for a mortgage a year or 2 years down the road, and you're starting to really turn a profit in your business, earlier on I mentioned S corporations. When you have an S corporation, you are then allowed to and actually legally required to start paying yourself a salary, which is beautiful news for a lot of small business owners who historically have not paid themselves very well. In that you legally have to start paying yourself a salary, at least at the level or beyond the level of the distributions that you take from the business in the form of dividends, AKA profits from the business. So you might start paying yourself $50,000 a year as a salary, or $100,000 a year, or $200,000 a year salary. At that point, it's coming from your business, but it is W-2 wages. And any traditional mortgage broker will generally honor those W-2 wages coming from your own S corporation. So that's just something to keep in mind for people that are like looking out into the future. They're thinking about changing the structure of their business. It could make sense to incorporate in that particular fashion. And then obviously, there's more to be said on like a future call, maybe with some other individuals that we can talk with about this, because I wouldn't claim to be a absolute expert by any means. These are some of the recommendations that I've given to clients who really wanted to get a mortgage and they didn't feel like their tax situation historically really set them up to do that.
Yeah, that's so. I've done a lot of mortgages, and I think working with a mortgage broker is one of the best advices. And I love your suggestion to kind of plan ahead a year or two or three, because if you can get into something that looks like W-2 income, that's going to be the easiest. And also, if you're filing your taxes in such a way that you have some profit that you can share, it's going to help you qualify for a mortgage down the road. We should definitely do a panel, I would think, like maybe get a mortgage broker and an escrow person, and you as a tax person, just have a few people to kind of talk through how to qualify for a mortgage or different ways that you can buy a house. I've done it a few different ways. And so that's a fun topic too.
Yeah. Yeah. And then, there's other opportunities out there like USDA rural housing loans, particularly on Hawaii, because pretty much everything is considered rural. Even if you're 5 minutes from the city, you technically live in a rural county and a rural zip code. So there's a lot of capability for USDA mortgages out here, but it's definitely worth researching. If that's new information to anyone listening, then there's a whole rabbit hole adventure that you can go into in relation to USDA loans. And a lot of, I won't say a lot of, but there are definitely homeowners out there that will not sell to a USDA loan applicant because they have been through the process before. And it does take a long time to go through that process. I have a client actually who's going through that process now. So, and there's a lot of paperwork that goes into it, and they approve people on the individual property, not just on the loan amount like everyone else. They have to approve that specific property for the loan.
That is one loan I've never tried to do. So that's interesting. I'll have to look at that. I bet with the housing market being so hot in Hawaii right now, it's probably not easy to get anyone to agree to that kind of a loan. But
right. Generally, it's like you have a friend who inherited some property. They're not in a big rush. They love you as a friend, but they do want to get their value from the market. And they're willing to sit through a process with you for 3 to 4 months like that. That's the sort of use case.
You've seen it.
Less so much like, oh, you found a place on Zillow and you went and met the people like that. Yeah.
All right. Awesome. Cool. Okay. Getting down to our last couple questions here. They're getting more exciting, I think. So here's a good question. Can hiring a $10,000 life coach help me make bank?
Yeah. So, I have clients on both ends, I will say. And I'm definitely not going to share any personally identifiable information. But yeah, I mean, I have life coach clients, and I've got clients that have life coaches, and I've got clients that have astrology coaches, and I have astrology coach clients. And the coaching industry it can be a lucrative one, and it can be, I know the light behind me is going a little crazy. The sun is starting to set here on Maui, but yeah, regardless of which, whether you're on the earning side or the spending side, but really a lot of times those go hand in hand within the coaching industry. Is clients that make a lot of money from coaching revenue are also spending a lot because they're going through continuing education. But for the most part, for what I see, at least in the black and white books, more often than not, I see people making huge investments in that space, and it not necessarily translating into huge revenue streams that are ongoing. One thing I will say about coaching, particularly for people that are just starting to break into that industry or getting curious about the industry, is that you will perpetually be in a sales funnel, because typically your clients that you've worked with historically will not always have referrals off the bat, because within every pocket of people out there, within every social circle, you might only have one or two people within that social circle who are really ready to experience like a coaching program like that. It's not like, if you're a mechanic and then you work on someone's car and you did an amazing job, and they'll tell literally all their friends, their grandma, their kids, like everyone will start coming to you to get their car work done. It doesn't work like that in coaching. So you're perpetually in this sales cycle, where you need to do outreach and find new clientele through Instagram, through social media channels. That it's definitely both a lifestyle, but you have to earn that lifestyle very much. You definitely have to earn your keep as a coach. And the people who I see spending a lot of money like that on coaching programs, usually the money kind of just fell out of the sky, and then they're like, well, I was talking to this coach, so I'm just going to send him $20,000 and see what happens. And then a year later, often they're doing a different line of work that doesn't involve that particular training, which is completely different from, mental health work and therapy. Like I think there's a huge amount of value in that. And I won't say there's not a large amount of value in coaching itself. Just sometimes people go in with this expectation of an immediate return on investment, which I definitely don't see. If I saw an immediate return on investment of that, then I'd be going out into the world preaching it to people. But it doesn't exactly work that way from the monetary financial perspective.
Okay, I like that. That's a good voice of reason. Let's reset our expectations maybe on that. Okay, good. Next question. Is crypto the modern gold rush? And am I missing out by not being involved? And how can I get set up to invest?
Yeah. So this is an interesting timing of this question, because to go into the astrology, Mercury just went into retrograde 2 or 3 days ago.
Yeah.
And it will be there for about 20 days. And meanwhile, crypto is experiencing one of the biggest crashes that it's experienced in the last 2 to 3 years.
We're in eclipses. We're right in the middle of 2 eclipses right now, too.
Right.
Generally, things out.
So, if you'd asked me 2 weeks ago, then there would be a very different answer to this question, I think. And I think that's the nature of very volatile investments, and potentially assets, if you want to call them assets. But regardless of what type of monetary element they are, because some people say crypto is supposed to be a currency, but it doesn't seem to operate that way. But regardless, they are incredibly volatile. So what we're seeing today is generally like a 50% loss of crypto value compared to their peak. But obviously that peak was an enormous amount of speculation. And some people are comparing it with like the .com bubble, that, last in 2021, that was pretty much the crypto gold rush. And what we're going to see this year is, does that gold rush happen again? Do people dive back into the altcoin world, or are there new technologies that develop? Because that's always the opportunity within a new establishing industry. Are we going to repeat some of that historical stuff, or did that already happen and we're kind of on the other end of it? But particularly, I think, there's lots of resources out there for how people can get set up to invest in crypto and to get involved in crypto. But the real important thing that I want people to take away in relation to crypto, that a lot of clients come to me after the fact and they just did not know, is there's probably a lot of activity that you might do on your crypto exchanges that is taxable, even if you didn't think so. So one of the biggest things that people come to me with a tax return and then they end up paying like way more than they expected, is that they made some transfers within a crypto exchange where they basically swapped one type of cryptocurrency for another, or they swapped coins. According to the IRS, that is a taxable event. Okay. So if you trade your Bitcoin for Ethereum, then that is taxable. Even if that money never went into your checking account, even if it never left the exchange, then that is a potential moment where you might be assessed short-term or long-term capital gains, which is taxable. And short-term capital gains, if you're not aware, for people listening, are taxed at your marginal income bracket. So if you're a $100,000 a year earner and you have short-term capital gains, meaning you sold that investment less than a year from the date that you purchased it, those are going to be taxed just like any additional dollar you earned from work at that tax bracket, which could be 22, 25%. If you don't have any W-2 earnings, then your short-term capital gains could start underneath your standard deduction, aka zero tax. And then once you get over 12.5K, you're going to hit that 10% bracket and then the 12% bracket. And again, it's marginal tax brackets, which are different from fixed tax brackets. Long-term capital gains operate in a fixed tax bracket environment. So if your adjusted gross income, including your profits from long-term capital gains, that's a key point that a lot of people miss in doing their calculations on their own. But if your adjusted gross income, including that profit, is above $40,000, then you should expect to pay about 15 to 20% of tax on those gains. And like I said, if you swap currencies, then that's taxable. So sometimes swapping currencies can be great. Like right now, the way that crypto is basically at its lowest level in 3 years, if people bought crypto very high, now would be a great time to basically wash that sale and to just sell that asset and immediately repurchase it. Because as it stands, mid 2022, cryptocurrency does not have washed sale regulations like other investments. So you're allowed to sell that asset off and repurchase it a day later and to take the tax event related to that. With other investments, you have to wait a 30-day period. Otherwise, it's like you never sold that investment to begin with. So today, May 12th, 2022, 2 days into this Mercury retrograde would potentially be a great day to wash some assets. If you're showing a lot of business profitability, then, if you had 2 Bitcoins, then you could potentially show, a $20,000 or $30,000 loss on your capital gains. And that will actually reduce your adjusted gross income and potentially knock down your tax bracket for everything else that you're paying as well.
I love it. That's genius. So that's really interesting. I think a lot of times people are so concerned with, which wallet to use and which coins they're swapping in Hawaii. I know it's very complicated to buy and sell and swap. Certain coins are not able to be purchased here. But they also need to pay attention to the tax consequences of all of those transactions.
Right. Yeah, because I've had some clients come in with multi $10,000 tax bills from cryptocurrency from 2021 tax year, because a lot of people, there's people out there who cashed out their retirement plans and put it all into crypto right in the middle of the gold rush. And there's people that earned a lot of money in those moments, but then stored their money in a different type of coin, something like a stable coin. Oddly enough, like one of the top 3 stable coins is now operating at like a significant loss or a significant lower value than it was a few months ago, which inherently shouldn't happen with stable coins. So even stable coins are inherently risky investments.
Yeah.
But yeah, I mean, there's a lot of people out there that have moved money into crypto, out of crypto, spent their money, forgot that they even earned a bunch of money last year, because when you're operating through a gold rush, you're not always keeping a meticulous receipt log. Like I can't imagine that the guys out in California in the early 1800s, mid 1800s were opening up their journal every day to write down how much they bought from the corner store, for the Coca-Cola. And I think people kind of forget. Yeah, people kind of forget to keep track of things when they're going through a really intense time financially, whether it's good or bad.
I find that to be true for myself. Yes, very much. Awesome. Okay, well, those were all of our questions that we had for you today. Thank you so much for all those kind of gritty dives into some of the details that can really bog us down sometimes. I think you have a really good grasp on how to navigate this world. So I'm really happy to have had you with us today, and it's been really helpful.
Beautiful. Well, I'm excited to connect more, particularly with any healers out there that are looking for a more holistic accountant. And my website is The Tax Guru, or thetaxguru.org. And I have a Calendly page, calendly.com/daymonet. That is like a booking program that you can use just to see what appointments I have available and whether that's an intro consultation or something like that. And you can find, I think, all of my contact information through the website, but my email is daymonet.contact@gmail.com.
Perfect. I can't wait to have you back on so we can get more into real estate, and we'll see where crypto ends up in a few months. Maybe that will be another in-depth conversation.
Beautiful. Yeah, it's always changing and growing and crashing and rising from the ashes as well.
Yeah. Exciting. All right, Day, thank you so much. Have a blessed day.
You as well. Appreciate it.